And I want you, like always, it's important for me that you look at this with a plan. Firstly, I want you to see, oh, this is something I know. I could have had this right. Or, oh yeah, I really don't know this. Let's highlight this and go study this. Now, when we do changes in working capital, remember what I said to you from the start. You do not use such and shareholders for dividends. You don't use them here. So when I go look at what they gave me, and I know it's very small here, but you've got it there with you. So I'm not going to focus, unfocus, whatever. Okay. So, but now if you look here, can you see they say trade and other receivables? You have to go to note 1. When I go to note 1, which is nowhere. Oh, where's note 1? Oh, note C, I would say. Note C. Can you see there's a such? So I'm not allowed to use that such. So it would be the 347 plus the 98. You see? Less last year. Okay, because last year there was nothing. It was just, oh, sorry, where am I? Last year it was just the debtors control. The same goes with the creditors. I'm not allowed to use such and I'm not allowed to use shareholders. Can you see it's the 120 plus the 24? The 120 plus the 24. Okay, less last year gives you. And it's important to have your brackets right. Next one, income tax paid. I am not even going to worry about this one because you guys did so well. Most of you had full marks with this one. Just remember, when they give you a block, you can go and you can draw your T. Opening and a closing and a bank and an income tax. Ooh, what am I doing? Bank and an income tax. Right. So if I look here, I see the opening such is with the payable, so it's a payable, so it's on the credit side. What was that? 21,200. The closing is with the receivables. You see? Receivables is also on the credit side. And then the tax. So if you had something wrong, let's quickly calculate the tax. So if I look at the tax, they didn't give me tax, but they gave me net profit after tax, and they say it's 72%. The net profit after tax is 72%. So it's easy. You say 990. You're so used to them saying tax is 28%, that when they give you the 72, you're like, what? Okay. So then it's just times, what am I looking for? Tax. And I have after tax. So it's 28 over 72. And there we go. You see? So most of you had that calculation. If you had something wrong, it was that. Dividends paid. So I say again, dividends paid, I want the opening plus the interim. What is the opening again? The opening is last year final. Okay? So, let's go look. Shareholders for dividends. Can you see they only give me this year's final? They don't give me the opening. So I need to calculate it. So let's go look what they say. They say, on 1st March, 1,600 shares were in issue. On 31st July, the company repurchased 88 additional shares, dividends. Interim, 22 cents. Okay, 22 cents on what? When was this interim done? Come, talk to me. 1 September. Where do you see that? Note. Interim dividends were paid 1st September. So if I go look here, can you see 1st September happens here? So it means I have 1.6 less 88,000. Ne? Does that make sense? Because I repurchased 88,000. So 1.6 less, why do they take 1.6? Did they say that everybody gets it? Okay, that doesn't make sense. Is there anywhere in the paper where they say that these guys are still getting their shares? I'm wondering about this one. Isn't that the one then? Oh, there it is. 1.6 million less the 68. 88. And that, okay. So this would be my interim. Okay. Almost died of a heart attack, but we are sharp. Now, they do not tell me what my final dividend of last year was, but they give me the cents, right? It's 30 cents. And what was it the end of the year? 1.6, because whatever is the beginning of the year was more last year as well. And that's where they get the 1.6 times 30. Okay. Then, I just want to ask, please remember not to switch the format. Just go see how many of you lost 13 marks because you swapped the two. You, instead of investing, you said shares and loan, and financing, you said fixed assets and fixed deposit. Just go look. A lot of you did that. Okay? So make a knot in your ear about that. Now, fixed assets purchased, remember, you go draw your T account. Fixed assets, it's an opening and a closing. Whatever I buy, asset disposal, and depreciation. So, if I look here, can you see they say the fixed assets is at carry value. So just by saving 721 and 5020, can you see if you get the difference between those two? And this is in brackets, you already got 3 marks. You just needed to remember also the depreciation. Okay. Fixed deposit is maturing. Yes? Yeah. Okay. Maturing, I see fixed asset, fixed deposit. They don't tell me what it is 2026. Did they give me any indication about the fixed deposit? Yes. Number G. They tell you the fixed deposit matured. So it means that whole one matured. And it's cash coming in. Straightforward. But can you see it's different than what we used to? Because we used to comparing the two. So already that throws you. You might think it doesn't throw you, but small things like that throw you. Okay, because, okay, but there it is. Let's look at financing. Financing is my shares. So let's go look. First thing, they told me I repurchased shares. And when I repurchase, I want the average price and the above average. Nay, I want the total price. And additional shares were issued. So, best way to do this is literally to go draw for yourself the note. Nee? So let's go look. I start out with 1.6 million. I bought back 88. I issued, they don't say. And I have in the end 1637. Okay. Then they give me the ordinary share capital starts out with 4 million and it ends with 655,000. This one, they say, we repurchased it at a price of 75 cents above the average. How will I get the average? What is the average? Can you see nothing happened between the opening and the repurchase? So that 4 million divided 1.6, 4 million divided 1.6 gives me what? R2.50. Okay, so that's the average. But we repurchase it at 75 cents above average. So add 75, it gives me R3.25. You see? So the 88 times 325, can you see? Repurchase. They did the two together. You could have said 88 times 325, or you could have done this. So what is this above 220? It's that one, you see? And the 66 is they just took the 75 cents. So that 220, it's the 88 times R2.50. You see? So they did it separately. You could have done it together. Make sure that I did mark it. Okay. And remember your brackets. Because if there's no bracket, you don't get that principle. Okay. Now, that 88, I'm going to times with R2.50, ne? And then I can see it gives me 220. And now I'm just going to reverse to get what was issued. So it's going to be 655 plus 220 minus 4. You see? And it gives me the 2770. If you did this calculation this way, here at the bottom, it's just as good as that bracket there. Is there any questions so far? I'm going to pause it for 3 seconds. So now they ask me, calculate the following financial indicators. Average stock holding period in days and the final dividends. Can you see it's only the final, not the total. So let's go look. I take, in other words, if it's stock holding, I'm holding the stock, so it's stock on hand. Ne? So it would be average opening and closing of my inventory, right? My trading stock. So let's see, there's my inventory. Can you see? There's the two inventory. So I put that there. Divided by 2. If I took those two divided by 2, can you see that whole thing is 2 marks? Then it would be 292,500. That thing that's printed there, the 585, is without the half. It's if you just added the brackets. Okay. Sharp. So, and then I divide it by my, what? Cost of sales. Right? 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 Oh. Okay, so let's see. Cost of sales, there they give it. 312 times 365. That 100 is wrong. It's 365 days. Okay, and that gives you 34.2. Final dividends. Final dividends. How many shares are in issue? Let's quickly look. It's 1.6. Oh, they tell you. It's 1637. Ne? What was the final dividend? Remember, my shareholders for dividends. This is always the final dividends. Okay? So it's that 294. And please, don't do this. No. Totally wrong. Don't do that. Okay. If you don't times with 100, that would be R1.80 or 18 cents, 0.18 rands. Okay, but I'm saying to you, do not show the signs. Okay, rather show the times 100, because then you'll get your 2 ticks. If you didn't show the times 100, you must have 0.18 if you didn't show the 100. Okay, it's also you that did that. Yes. Oh, it was you, not you. Sorry, it was you. I knew it was someone close. Yes. Here, number 1.4. So 1.4, please listen. Identify 2 major decisions taken by the directors. Quote figures. Explain how these decisions would benefit the business in future. Now, I want you to please listen. This is a very popular question. They like to ask you, what is the decisions the directors made? Now, remember, what are we busy with? We're busy with the cash flow. So this is decisions about the cash. So they literally, and I wrote it here for you, they want to see the inflow or outflow of cash. They don't want to see, oh, it increased from this to this. We're not doing analysis here. We're doing decisions. So they want to see how my cash was influenced. Okay, now, if I go look, a lot of you would have said, the fixed assets increased from this to that. Can't do that. Because the amount for the fixed assets there, is carry value. And it's not the cash that came in or cash that went out. They want the real cash. So in other words, I had to go and go look at your answer here. I had to go see, did you transfer this answer? 2.4 million was purchased. The loan decreased so much. Oh, we never did the loan. Ooh, attention deficit. This repayment of loan. Remember, if I say to you, you have your loan T, opening, closing, bank, interest. This bank is most the interest and the payment on loan. You agree with me? And then in the cash flow, I only want to show the part that I paid on the loan. So usually you would take that bank, subtract the interest, and then you'll get whatever you paid on the loan itself. Does that make sense? Okay, but now they threw in this little thing. They say, where's the loan? There. A fixed monthly repayment of 18,000, excluding interest. You see? Excluding interest will be made. So you can just say 18 times 12. They already subtracted the interest.
Then why are they saying it's not that the interest is capitalized?
Because it is. So in other words, what they're saying to you, the interest is capitalized, but they are saying to you, this is 18,000 times 12. So they're giving you only that part. They're not giving you this. They gave interest expense here. And that, so in other words, if I calculated the 18 times 12, I must still add the 315 to get to the bank. Can you see, this is a nice thing, because this can be asked in a different way. They can ask you to do a loan T account, in the income statement, and then they give it to you like this, where they give you only the short-term loan, and then you have to know, oh, I need to add back the interest to get the total payments. You guys with me? Okay. So just go look at that one. Let's go back to this. So this, I had to use your wrong figure. If you said an increase in loan, new shares, shares repurchased, anything like that. 1 mark, I had to refer to your figure. Now, benefit. So fixed assets. The thing with fixed assets is you always say it means they are expanding, which means a better profit coming. They can operate over a larger area, so they're going to do better. Okay? Loan is decreased. I would say here as well, the interest on loan is now decreasing. That's a good thing. New shares were issued. So, what happens if new shares are issued? Your debt equity would most probably improve. Because you have now more shares. You have more capital, which is cash. You have more cash. Here you have to read. I can't just go on the memo just as it is. Okay. Shares were repurchased. Now they have there. This would raise the NAV, EPS and DPS because the numbers of the shares are lower. Does that make sense to you? Remember, whenever I calculate NAV or DPS or EPS, I always divide it by the number of shares in issue. So if your number of shares in issue becomes less, but the amount at the top stays the same, can you see the value is going to increase that you calculate? This is a very complicated answer. I would just say less voting power to shareholders, or what votes is distributed now differently, anything like that. But I would not have given that as a reason in the first place, because if you look at the figures, it's always best to go for your biggest figures. So you go for the 2.4 and the 2.7. I would have done those two. And for yourself, I would suggest choose 3. Go put 3 for yourself down to study, with a reason. Okay? So you already, when they ask you that, you go, look, did the loan increase or decrease? If the loan increased, you say this can have a negative effect on the debt equity ratio. If the loan decreased, this can have a positive effect on the debt equity ratio. If the fixed assets increased, the company is expanding. If the fixed assets decrease, the company maybe sold these things to replace it with better machinery to be more productive. Okay, so you go and you choose your reasons, because you can't really go further than this. You can't choose to pay tax. That's not a choice. You can choose to pay dividends, I see, but they didn't even mention that, because they always go with choices. They always go for the loan, the capital, and the fixed assets. That's the most easiest ones to comment on. Okay. Any questions on this? You guys still alive? Must I stop recording now and start the other one new?